wheels off and interview somebody without him. And so here we are. This is second, interview number 2 for me, and a really important and exciting one that I'm really grateful to be able to take part in. We've got Chris Lamm here. First off, before I jump into like who you are and how we know each other, what's up, Chris? Man, how are you doing?
I'm good, bro. It's good to be on here on a Friday morning with you, and just enjoying the summer, enjoying the kids being out of school and getting a little extra time with them mornings, evenings, and you know it's just super fun to have kids during the summer and to be reminded what it was like not too long ago.
Yeah, yeah, hell yeah. I love seeing your stuff on social because it just, I don't know, it like reminds me that balance is a thing. Reminds me that, like,
Hmm.
that reminds me to focus on what's important. So yeah, Chris and I have been working together now for a couple years. Chris has been a client of Empower. We got introduced from a mutual friend of ours. Chris is a core coach that's, and I'd love to have you dive into a little bit more of like just kind of your resume because it's super
Hmm.
impressive. But also just a heavy hitter in this market and a really jacked up, market if you've been in this business for a long time.
Hmm.
And then we've kind of grown and adapted over the last couple years together, and I've gotten to
Hmm.
kind of a front row seat to see what you've been up to. So thought it would be really cool to just kind of share your story and share some tactical feedback from somebody who's super plugged in at the high levels of the industry, right? You're a part owner of your mortgage company, right? Mortgage One.
Minority partner. Yeah.
Minority partner. Yeah, yeah.
Yeah.
So definitely like, yeah, you just have really unique perspective that I'm excited to get from you. So yeah, before we get started, can you just a little bit of like your resume, like quick
Sure.
elevator pitch? Who's
Yeah.
Chris and why should people listening to this care?
Sure. Well, like he said, I'm Chris Lamm. I'm in Redding, California. It's north of Sacramento, 2 hours. Really small market, about 100,000 people in our city. Been here most of my life. Been in the mortgage business since I was 17. I got in
Damn.
when I was in high school, and just never got out. So I had a front row seat to the financial crisis of 2008. I was a loan processor and saw it all. And I feel crazy because, Michael, I don't know about you, but time flies, right? So when I tell people about Transbox and faxing rate sheets, like it really makes me feel old because I'm one of those guys now. I'm talking about like what it used to be like back in the day, but I actually saw all that, and I'm super grateful for it. The mortgage industry has been one of the greatest things that's ever happened to me. It's definitely not an easy business to be in, but I don't like easy. I like challenges, and I just love it. It's an exciting business to be in because it's always changing. I got three little kids, and I've been married 15 years up in Reading, and we have a lot of fun together. Part of my story is about 15 years ago. I was in the business for 6 or 7 years. I started getting serious about origination, and I got married, and I started working like crazy. I'm super competitive, and I started running into some challenges with the marriage, and because I was working so much and I wasn't paying attention to my wife. And I'm married to one of the best humans I know. And honestly, I did not know how you could be in the mortgage business and have a quality life at the same time. I just did not think it was one or the other. Because if you're going to be great at mortgages, surely you got to work 80, 90 hours a week, answer your phone whenever someone calls, even if it's midnight. All roads lead to you. And I was closing 5 or 6 loans a month at the time, making a good living at the time. And I was just like, I don't know what to do here. And around that time, I was introduced to the coaching program I'm a part of now, the core. Long story short, got in the core, started learning about systems and structure, started networking with industry pros like you. The world became a much smaller place to me, and I just started picking up on different ways to do this business, better ways to do this business. My hours went down, my volume went up, my income went up, and over the last 10 years, I've been able to do things that I never thought would have been possible when I was a kid. Because I never had I never had a lot of dreams in high school to go to college and be a doctor. I mean, I didn't even know if I would graduate high school. I was kind of a crazy kid. I was partying all the time, and so for me, what's happened in my life mostly through mentors and just becoming a student and always wanting to learn how to do things better. It's been an unbelievable journey, man. It's been so much fun. So today I run a branch. I've got a few LOs. I help do some sales coaching with our company. You mentioned I'm a level 3 coach with the core. So I've got a bunch of students who, make $500,000 plus a year and coach them every week and get to, run with all the level 3 coaches who are some of the icons of the industry and my very close friends. And I just admire them so much. They've changed my life. And I feel like the most blessed guy in the world, honestly, most days. I can't believe who I get to talk to, who I know, the people that I get to call my friend. And, like I said, it's not easy to be in mortgage today. But man, if you're the type of person that wants to learn and likes challenges, there's a lot to do right now. There's a lot to learn and things are changing and they're exciting. And I'm really excited about the future. So.
Oh yeah. Hell yeah. That's I've known you for a couple years and we've talked in times where like I've seen you with a super high stress level. You've seen me with a super high stress level. Luckily, I don't know that that's ever lined up perfectly to where we've both just been at a 10 stress wise, which has been awesome because I've benefited from some of your wisdom in that. And so, but you've always had that attitude. And I don't think that that's a coincidence. It's very likely, chicken and egg situation. Like you have that level of gratitude and that level of just appreciation for life in general. And I can't imagine that you don't just continue to attract positive shit into your life by having that outlook. That's really cool. I wanted to ask about core before. I know we didn't even really talk about that coming into this, but you bring up level 3 core coach. You bring up the clients that you have, or the coaching, students that you have. What is it? And honestly, I reflect back on a conversation we had probably about a year ago where you expressed that it was time for you to get back to some of the basics, some of the blocking and tackling type stuff that the core, that the core really hammers home. What is it? What do you think has made, from your front row seat, what has made core so successful? The core. What has made the core so successful over the years? And why is it still, as big, if not bigger than it's been, I know you talked about not reunion, that's KW's, but your summit, right? The core summit and how big that was. And that was really eye-opening to me to just how, people don't talk about the core maybe like they did, 10 years ago in some circles, but it's still just as big today and still coaching some of the biggest hitters in the industry. How is that program been so timeless in the success that they've been able to create for loan officers?
Well, that's a really good question, Michael. And I've thought a lot about that over the last couple years because, the core's been around for 30 years. Rick Ruby is the head coach, the owner, the boss. And, we've like anything that's successful, we've had our fair share of criticism for lots of reasons. But one of them is that some of our tactics are antiquated and old school. And, I just want to say that I've heard people say that to me, and I will say I've never heard someone that closes over 5 loans a month say that to me. Okay. So, the first thing that we have to look at anytime somebody is going to tell us they know how the business should be done is let me see your W-2 and let me see your P&L, because one of the things that differentiates the core over a lot of other programs is we have a lot of transparency and we lead with our results. We show people what we make, what we save. And I think we've created 730 multimillionaires through the core. I think we've had a couple thousand people go from a couple $100,000 to $1 million net income as loan officers. So the results are there. Anyone that knows about the core, the top 100 in the Scotsman Guide, a ton of those people are in the core or were in the core for a long time. So the results, I think, is the thing that people hear about and see that is like, wow, that success leaves clues. What I think is there's a few things in the core that I think make it what it is. The first thing is Rick said the other day something that I've been really thinking about. The three things that are keeping loan officers successful in 2025 are they stay close to the money, they know their perfect client and they go get more of them, and they're better at the basics than everybody else. And so I would say those three things really sum it up right now. During 2020, I closed 550 loans. My branch closed 1,000, and it was a massive year. Obviously, it was easy to do loans for anyone that had a pulse and a phone, right? And you had a lot of loan officers who had to scale their teams up. And what happened is so many loan officers got removed from the point of sale. They stopped engaging and building relationships with the clients. Now, some of that was by necessity. I mean, there was a month I closed 65 loans. I can't possibly meet with every person. There's no way. There's not enough time in the day, right? So some of that had to happen just to service clients. But the problem is, and this is true for me. So this is what happened for me, but I also know it happened for a lot of other people. Loan officers became entitled. They became special. They started thinking they were CEOs, and they started identifying with the income, and we kind of forgot some of the most fundamental things that got us successful in the first place. And really what that is this is a relationship business. We build relationships with our partners, realtor partners, with our clients, with our VIPs, with business professionals. And part of my story, Michael, and this is like after 2021, I had a pretty good year. I moved companies, and I was in the core, but I was hearing all the noise about AI and social media and all these different things, and I was trying to figure out, like, what is it going to take? Because I'm in California, and California has been a beast over the last couple of years because of affordability. Coaching students and being in the core, I'm seeing guys in Ohio are still killing it, where the price point's $225, and we were really having some unique problems in California. So closing loans, every single person, all my other coaches that are in the Bay Area and LA, we're all having these similar challenges getting loans closed. And so I go on this journey to try to figure out, like, what is the way to get business, in 2024 at the time, beginning of the year. And I go to some social media conferences. I start studying AI. Of course, anyone doing AI content is telling you, if you're not doing this, you're out of a job. And I'm like, yeah, I think they're right. And at the end of the day, man, like I spent a lot of time, and I struggled longer than I needed to. And I would say October of last year, I just realized, man, I have not been calling my past clients. And if I'm really honest with myself, the things that I used to do, the things that I'm coaching people on doing, I am not doing myself. So I just got really honest, and I said, what do I need to do right now? And I just need to get back to the basics. So I recreated my schedule. I committed to some very simple activities, and I went into the calls because I was rusty on prospecting. And I just decided all I'm going to do is reconnect with people and try to serve them at a high level, even if that doesn't have anything to do with doing a loan for them. And so one thing I did was I called 30 to 40 people a day. I had theme days. Monday was realtors. Tuesday was status calls. Wednesday I called all my pre-approvals. There was a time I had 250 pre-approvals, and I thought, I've got all these pre-approvals, but I never talked to any of them. And I was shocked when I started actually using my CRM the way it was supposed to be used, that half of them had bought a house already. Half of them decided not to. One of them died. I was like, no, I did not have 250 pre-approvals. I had like 30 or 40.
Yeah.
So in that process, I'm also cleaning up my CRM, because my CRM was a dumpster fire at the time. Like it definitely wasn't using it. Like it, and so we started rebuilding the CRM as we're rebuilding the business and reconnecting with people. And I also, I knew that it was going to take time. There's a saying out there that consistency will always beat intensity. And I knew that if I just can commit to this, I can't expect to have business showing up in my pipeline 30 days from now. Sure, I'm going to get a couple deals here and there, but this is something this is a 6-month journey to change my business, right? So I just put my head down. I started making calls. I started doing call nights, like I did back in the day. I started inviting my realtors into it because they had some of the same problems. They were struggling to get business. I was like, hey, let's do some call nights together. Let's do a text group. You guys can all sit in the offices in my office and we'll do a text group. And if you get a lead, put it in. Let's all celebrate when we set appointments, get leads. And we just tried to make it fun. And I tried to create a culture of doing the really basic sales activities that so many of us don't want to do, because we'd rather do the easier, softer way. And it started working. It was the first thing I started noticing was I started reconnecting with clients that I hadn't talked to for a while, and I really liked them, and they liked me, and it was really cool to connect with them. And I got way better at closing. One of the things we do in the core is we do a greatness tracker. We track our sales activities. Part of that is 75 great talk tos a week. And if someone does a greatness tracker every week, 20 face to faces, 4 break breads, 75 great conversations, 20 note cards, the bottom of the greatness tracker is leads, pre-apps, and deals, right? So what we started doing is making sure people filled the greatness tracker, but even more than that, we started making sure the quality of those phone calls was really, really good, and we asked for referrals as much as possible. So we started really practicing prospecting again, and we started getting good at it. A couple of friends, LOs, some of my realtors that I work with in my local market, and the evidence was right in our lead tracker. We leads started showing up. We started getting more appointments. I started reconnecting with people, and I would say about 3 months later, I mean, my leads went from 50, 70, 80, 100, 124. Pre-apps started coming in, and I told you, I think last month was one of my best months in a few years. I closed 28 loans last month, and so yeah, it's been a journey, and I think the message for loan officers right now is this business is still a relationship business, and I don't think that will ever change. You got to build relationships with people, and you've got to add tons of value to people, and if you do that, you will get business. It's really simple. So that was a long answer to your question, but I think what the core does best is we give people a recipe to success. And the second part is we hold them accountable to doing the work. Because left to our own devices, Michael, you and I, like, we probably are not going to go to the gym. We're probably not going to, but when we hire a trainer or when we bring some buddies in and say, hey, let's do a 90-day challenge on nutrition, when you bring other people in and you get held accountable, you just have a higher success rate at anything you commit to. So
Yeah. Yeah. Oh,
So should I hit refresh?
ask, then are you in incognito browser?
We good?
Yeah, that's powerful, man. The do you still do those? Like, is that now a regular part of your schedule? Like how frequently are you doing those call nights now, and how have those kind of evolved since the first like kind of ad lib one that you did?
I'm not doing them very often anymore, and the reason why is because, like I said, consistency will always beat intensity. So one of the things that I really try to coach loan officers on who struggle with the ups and downs in their pipeline is like the ups and downs in your pipeline reflect the ups and downs in your prospecting. If you just try to do the same thing every day no matter what, and you don't change because of your emotional state, or because you get spun out because a file got suspended, if you can try to remove the emotion from this business and be as tactical as possible, you should not have to work long hours. Like, you can totally close 20 loans a month in 45, 50 hours a week. You don't need to work 80. And it blows my mind because, and I know you see this, you find loan officers that close 20, 30 loans a month, and a lot of loan officers that close 4 to 6. What's crazy about the 4 to 6, because I just did a semi-annual review with a bunch of students that close 4 to 6, is I ask them, how many hours a week are you working? 70, 80. What's crazy is the people closing 20 to 30 are usually working 40 to 50, right? They make it
Yep.
look easy. Isn't that the truth about people that do things at the highest level? We all know the thing that makes us all mesmerized by people that are doing anything at a high level is they make it look easy. And I think the reason that is because they're just more consistent. They don't allow things to take them off course. They're incredibly focused on the plan, and they follow the plan no matter what. And so for me, that has been really the key. Is I don't want to return to call nights again. And I shouldn't have to if I followed the plan. And the plan for me is always measured by the sales activity. It's not, and the data, it's not measured by the hours or the effort anymore. So no, I don't do call nights. It's not to say that I wouldn't if there was an opportunity to train some people or some of my realtors want to do it. The benefit of call nights, for those of you that want to reboot your business, because it is a totally effective way to do it, is you reach a ton of people after 5:30. People will answer their phones, especially if you're calling past clients. Like, if you want to call past clients, I mean, you're going to get 50% more pickups after 5:30 than you are during business hours. So that's a pretty big deal. If someone's struggling right now and they're closing less than 4 loans, one of the assignments we give them is 200 outbound calls per week for 90 days. And we tell them to do 2 call nights from 5:30 to 7:30 for 90 days. I've seen so many people go from 3 loans to 12 loans in 90 days. Tons of people do. It totally works. I don't want to say it doesn't have a purpose. It does. But if you're doing things really consistently, you shouldn't have to.
Yeah. Oh, that's crazy. That's cool.
Yeah.
So when it comes to these agent relationships that you have now, and you're continuing to build your business, I guess my biggest question, forget about the agent relationships for a second. My biggest question is, if we see another wave of easy business like we did in 2020, 2021, and we get that influx of volume that we did, how does Chris Lamm approach that market different? Like, how does he approach that market so that you don't have that same whiplash coming out the other side, where all of a sudden, you're removed from, you're too far away from the point of sale and your relationships aren't as fresh? Like, what are you doing differently in the next boom market to protect yourself against the bust that follows?
That's a great question. Well, I actually think that at least in the core, A lot of loan officers are better at scaling up than they are scaling down. The scaling down over the last 2 years has been the biggest problem for most LOs that were high producers. And you see it all the time because the production trend for so many people were, 20 loans a month for years. And when this market hit them, they dropped down to 3 to 5. Like that's a 75% reduction in volume, right? So we actually all know how to hire and how to build. A lot of us know how to build systems and to approach that kind of market. I think what would be the best question is, what would I do differently? Now, one of the first things that I'll say is there were years where I got referred by 100, 150, 200 realtors, and nobody can possibly manage that many relationships, right? So over the last couple years, one of the things that I've done and a lot of us in the core have focused on is identifying the right realtor partners that we want to work with and focusing more on them than the onesie twosies, right? So we call this whale hunting. And in our world, an ideal real estate agent is an agent that is close to the money, meaning they're not a mega team with the biggest Zillow account with 15 buyer's agents.
Yeah.
I do not want to work with those teams ever again, right? Because the relationship's always based on money, and it's like you can't really build a relationship with people like that, right? So we really like the realtors who are 20 million a year producers who close 40 to 100 sides. They've got a couple buyer's agents, but they're really engaged with their database, their clients. They're close to the money. That's the term we use. Those are the agents that I like the most. So I made an effort over the last couple of years to really focus on deepening the relationships I have with those people, but also building more of them and slowly but surely letting the B's and C agents go.
Yeah.
Now, if they want to continue to refer me, we're going to serve their clients at a high level, but I'm not going to be able to spend a lot of one-on-one time with them. And the beautiful thing about that, Michael, is I can manage 10 relationships, but I can't manage 100. But if I have 10 solid relationships or 15 really solid realtor partners that refer me 1 or 2 or 3 closings a month, I can be a partner to them. I can go down to their office. I can help them with their team. I can reciprocate with referring business to them. I can co-market on their client appreciation events, and I'm happy to do it because we have a relationship that's built on value and trust, and I want to support them. And so, the beautiful thing about that kind of business model when you're working with higher level realtors is you can just be a better partner to them. You can offer them so much more because there's more of you available to them. So I would say if we got into a crazy busy market again, the good thing about how I'm doing things now is that would not change. And they would be experiencing it too. So I would just be figuring out, how do I help them navigate this market? Hiring more people, building their team out. Those are things that we coach on. The other thing is I know who my perfect client is, right? And if we got crazy busy, I may have my team run some of the refinances. When we get a lead tracker, they know which ones I want to meet with no matter what. If I get a personal referral from certain people like my VIPs, I'm going to meet with them no matter what. They're going to work with me, right? But if we have someone come through the internet that I have no relationship with, one of my junior LOs is going to probably work with that client.
Yeah.
So, it's just, I don't know if we'll ever get into a market like that again, to be honest with you. But if we did,
Hey, we said that before. We said that before, though, right?
It could happen, man. It definitely could happen. It could happen tomorrow. You never know. That's one of the exciting things about the business. But yeah, I don't know, man. I think I would just really focus on the key relationships. I would make sure that no matter what, I don't neglect them, and I would probably be really surgical with the loans that I'm personally working on and the ones I let my team work on.
Yeah. I think that's really that's really the key, right? Is the, when people saw the hangover after that refi boom, it was a lot of the LOs who completely neglected their most important relationships as soon as the money started coming in. And I think that's, to me, that's really the key and one of the only things that we can focus on. The other thing though, and it's, I'm going to challenge a little bit on something that you said, which is that we're good at scaling up in the mortgage industry and not so good at scaling down. And to me, like, on, because my business has seen the same kind of up and down because
Yep.
of the
Yep.
market. And so to me, like, I challenged the idea that I was good at scaling up if I wasn't able to scale down in time, like with the right timing. Like, I wouldn't say that I'm good at scaling up at the point that I was able to scale up, but as soon as shit slowed down,
Yeah.
I wasn't able to scale down fast enough. Well, yeah, I mean,
Yeah.
anybody can build while the market's right, like raising
Yep.
you up, but how much of that business can you hang on to on the other side?
Yeah.
That's what determines were you really good at scaling up in the first place. And so that's
It's
really
so
what I
true.
was leaning into with this question, is like, if we're scaling up, we've got to be more tactical about how we're scaling up, because otherwise we're just going to replay the same bullshit that happened the last two cycles.
Yeah, no, it's so true, man. Yeah, one of the many things, but this one specifically that has come out of this market is I've become so much better at my P&L, and I'm sure you have too, because
Yep.
we were forced to get into the weeds on
Yep.
all these little subscriptions and negotiating price with our vendors, and there was so much froth. And
Yep.
I would say that if we scaled up again, I would hang on to profit better than ever before because of the last couple of years and what I've learned. I've
Yep.
learned there was so many things that were not necessary, and controlling your cost to manufacture loans is so incredibly important. And I look at our PN, I'm so much better at my P&L than I used to be. There was a time in 2024 where I was upside down $500,000. And that's a lot to some, and I know people that were upside down a lot more than that. But that was a scary time for me. I'm like, man, what am I going to do? How
Yep.
am I going to get out of this hole that I'm in?
Yep.
Now you can definitely earn your way out of that, and that's a big part of it. But you also have to look at how do we become more efficient? How do we become better? How do I hold my team more accountable without running them out the door? And so you become a better leader naturally, because you start having to really think about your team and, like, are they really at their capacity, or are they just comfortable? Is there skills that they need that they don't have that would allow them to do more? And
Yep.
so, that was also part of our process the last couple of years, is I had to elevate the team. Everyone had to do more with less. And I managed to get through this whole thing without laying anybody off.
Wow.
Rick says
That's
I
powerful.
probably should have, but I just my team right now that I have, honestly, they're family to me, and I care a lot about them. And it doesn't mean I don't hold them accountable. I hold them I have extreme accountability with them more than ever before, but I also show them a ton of appreciation. And when we win, they win. And I do a lot of nice things. I take a lot of personal interest in their lives. And, you cannot discipline people without relationship and connection, because they'll rebel.
Yeah. 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 So ultimately, at the end of the day, it's like, how many of these lessons can we hang on to? How long is it going to take before we see that, like, a boom cycle again? And how many of these lessons that we learned can we hang on to and keep close for when when it does start picking up and we
Hmm.
start seeing that activity
Yep.
and those checks coming in, for sure.
Yep.
Okay, what the future of the industry, right? We've talked a lot about like where, how you've been able to build back up over the last couple of years, and we've talked, and I think it's really valuable what we were able to cover with the core, and how much of the success of the core is really just keeping people accountable to the basics, and keeping people accountable to the activities that we know are revenue generating activities, as opposed to, I really liked what you said earlier about, like, our ego gets wrapped up in our identity of being bigger than we are, and our position. We're not a loan officer anymore, we're a business owner, and business owners
Hmm.
get to sit in their chair and make tactical decisions and not actually,
Hmm.
like, do these things. I like so obviously I'm sure the core, and it has been a big part in that refocus for you.
Yeah.
Where do you see the future headed though? Like obviously there's so much room and so much value for everything that the core teaches, but what are some of the things that are disruptors? What are some of the things that you see like happening that loan officers do need to lead into to complement some of that blocking and tackling, like back to basics type of activity? And
Yeah.
where do you see the industry going with that?
It's a good question. And before I answer that question, I think it's important that people understand you don't want to get too far into the future because it is unpredictable, right? And I see a lot of loan officers who they focus so much on what Housing Wire says and the Redfin Rocket merger and the threat of AI that they're literally losing money right now. Like the fear of future is already affecting their business right now. So it's like you have to be really, really careful about looking into the future, because if you allow it to keep you from taking action now, like you might as well already be in the AI disruption because you're being disrupted and it's not even disrupting you yet. And I'm sure you've seen
Amen.
that too. Like people have to be really careful.
I
So
mean, I've done it. Like not
I
only have I
have
seen
too.
it,
I
but
have
I'm
too.
a yeah.
Yeah, it was totally, bro. I mean, there's been times where I'm like, I've gotten fearful about, am I going to be able to do this in 10 years? It's a real fear, but you got to be really careful because while you're thinking that, there's a brand new loan officer in a branch down the road that doesn't pay attention to anything, that's being coached and just doing the calls and what she said, who's been in the business 1 year, you've been in the business 15 years, and she's closing twice as many loans as you this month.
Yep. Yep. We talked
Right?
about that a couple episodes ago. The mental baggage that comes with being in this industry for an extended period of time can end up being negative and not a positive like
Exactly.
experience. Yeah.
Yeah, so if anything, if you're looking at some of the stuff going on in our industry right now and it creates a little fear, I would say use that fear to motivate you to make as much money as you can possibly make right now, because there are still tons of loan officers breaking records, making $1 million, $2 million, $3 million a year in this market. They're not waiting for a boom, they're creating their own. So that's number one. As far as your question's concerned, I do see that all the some of the disruption coming. And I think if I had to give my best guess, and none of us really know where it's going, the first thing I would say is you got to follow the money. And right now, the money and the margin is in non-QM. Non-QM is one of the greatest opportunities there's ever been. I started doing non-QM about 4 years ago. I was working at Change Home Mortgage. They were the #1 non-QM lender. They were one of the first big non-QM lenders to the marketplace. And I started doing DSCR before anyone knew what it was, started doing bank statement loans, no doc loans before anyone knew what it was. And I was easily making 200 grand a year doing loans that no one else could do. That secret's out now, and a lot of people are doing it, but it's still a massive opportunity that is very, very untapped. And I talk about it all the time with coaching students, with coaches, and I'm still surprised how many people have not cracked the code on non-QM. So the margin is in non-QM. The clients don't shop you as much. You're not going to struggle with refinancing them because a lot of the servicers don't do non-QM. So learn to do non-QM. That would be one tactic I would say is so critically important for people that want to be around 5-10 years from now. We're seeing a lot of big mergers right now with tech companies. I think that's important to pay attention to. I really do. And I think that there will continue to be a large percentage of home buyers and homeowners that refinance that will use Rocket Mortgage and these online companies. But it doesn't mean that you can't do well. You just have to differentiate yourself. The moment that you, like in the core, for example, we've tracked this for 5 years. If you meet with a client face-to-face, your conversion rate is 70%. If you're the first person to meet with a pre-approved buyer or a buyer and you get them pre-approved and you meet with them face-to-face, you build a relationship, your chances of converting them to your client are very, very high, okay? Yeah. If you take a borrower over the phone, it's like less than 10%.
Damn.
because you're putting yourself in the same world as Rocket Mortgage. You're just a commodity, right? So you cannot compete with some of these big box lenders that are really making some big moves right now. You cannot win playing their game. So you have to change the game, and it has to be built on relationship and value. Okay. If I will say, I'll also say this: Zoom is about 30%. Zoom is so much better than phone, right? So one of the things that we really focused on in the core was we started tracking how many of the clients that people were meeting with post 2020 were face to face. And what was crazy was the people that got back to face and fought hard to get back to it, because so many clients and people got used to doing things over the phone and digitally, they were closing twice, maybe 3 times more transactions than the people that were still doing everything over the phone.
Damn.
Right. And we have a lot of coaching students and coaches in big metro markets like Seattle and LA, and they're like, hey, these clients won't drive 50 minutes across town. Like, what do I do? And so we understand that there's challenges, but even like Julie Johnson, who's one of our best coaches and one of the best lenders in the country, she's right in the middle of Seattle. Maida's across the street from her. 50% of her clients, they found a way to get them in the office. And if it was a big enough client, she would say, hey, I know you couldn't come in for our appointment, but your office is on the way home from my office. I'd love to just shake your hand. Can I pop by sometime this week and shake your hand? Like, we literally had loan officers who would pop by someone's office and shake their hand, and just to try to build a relationship. The other thing that she did was, when she gets a new lead, she demands that the first call's on FaceTime. Right? So I think that there is going to be disruption. Like, that's always going to happen. But if you can keep connection with people and you can build relationship with them, people still want to work with people they like and trust. Cost is not always the first thing. Oftentimes it's the second thing or the third thing. And but if you don't have the relationship, it's always going to be on price. And that's where people are going to lose. So I think margin compression is a real problem for us right now. The servicers are using AI, and I think Ron at Cross Country has shared with people before, he doesn't think we'll ever have a refi boom again, because the servicer's ability to track behavior and understand when a refi is possible, and the fact that they'll do it for nothing just to keep that SRP, or keep the service premium coming in. I mean, but I have found that that's not true, because I'm calling my past clients, I'm making really good notes, and luckily I think the triggered lead thing just got I saw something last week. Did you see that on the trigger leads?
Yeah.
Isn't it going away?
I saw it. If it's the same bill that I was tracking through, it's cool. It's a step in the right direction, but it's not gonna not coming to save us by any means.
Yeah, let's talk a little bit about AI. I believe in AI. We use a lot of it. I heard someone say AI won't take your job, but the people that use it will take your job. I do believe that. We use a ton of AI right now, and it's super helpful. It increases efficiencies, but you just can't.
Oh yeah, you guys have our AI agents, don't you? You guys have our AI agents working.
Yeah,
leads,
we use your AI agents. We have custom chat GPTs for calculating income, checking non-QM guidelines. And it's starting to get integrated into a lot of our tech that companies use. Blend, Flowify, Encompass is eventually going to probably start using. Well, they are, through integrations with calculating income and underwriting. So, if anything, I think it's going to improve efficiencies, which allows you to do more business. At least that's what's happening right now. So I'm actually really optimistic about disruption, and I think that's the mindset you got to have, is like, instead of how this works against me, how can this work for me? But you're a tech guy, man. I'd love to hear what you think about it. I don't pay attention to it nearly as much as you do.
Yeah, I mean, what you said around, really what it comes down to is using the tech to augment your relationships. And as long as that's what you're doing, right? If you're using, if you think of like a process of EOS calls it delegate and elevate. Dan Martell calls it a replacement ladder. And it's just this idea that like you're consistently trying to offload your low value activities in pursuit of higher value activities. And if the lesson that we learned from this last cycle is that our highest value activities are relationships, and we keep that forefront, then AI becomes an insanely powerful tool to help us get more into that lane. The issue that I see is when I see that like relationships being the first place that people want to apply AI. Like AI, you know, again, I mentioned the AI agents earlier. Like, what do you use those AI agents for? You use them for internet leads that you've never talked to before. You would never use that AI agent for a referral from a real estate agent. You would never use that AI agent to do outbound voice calls to your database. Like, you would never do anything like that, or at least not anytime freaking soon. Why? Because you understand that the value is in that relationship. And so really, I think you hit the nail on the head, is that like the distinction that we're always going to be able to have, hopefully, over a company like Veterans United or a company like Rocket Mortgage, is that relationship component. And yeah, that can be as simple as face-to-face. That can be like, you can get more creative than that if you're not a face-to-face, you know, LO. If you live in a remote area and you want to have a market that's bigger than where you live in, and you're not going to move your family there or whatever, like, there are opportunities. You just have to make sure that what you're focused on is the relationship. And if that's what you're focused on, then what you do is you use all this tech to find ways to like augment that and improve that and create more opportunities for that. So, you know, an example, like HeyGen is that tool that allows you to kind of create your AI avatar that then can now like actually execute videos on your behalf. So you can like swap out, personalize it with your client's name and shit like that. And so, you know, clients that are like, oh yeah, I'm going to do this instead of, I'm going to do this for my annual mortgage checkup with my client or whatever. And I'm like, what the fuck are you doing? Okay. Why? Because on the flip side of that, you have somebody that's like, I generate a bunch of internet leads right now, and it's really hard for me to stay in touch with all of them. And so this HeyGen tool I can use, I'll be super transparent that it's AI, but now they feel closer to me than they did before. I'm now using this tool to like make my relationships stronger and using it in areas where I was lacking, as opposed to using it to like delegate and elevate out of the relationship pieces of my role. And I think if the LOs that lean into that approach and stick with that approach, it's this, we've been hearing it. I've been hearing it since I got into the industry, was that, you know, both sides of the equation of like, yeah, loan officers are going to be obsolete. And then there's always the counter argument of like, yeah, but there's always going to be room for a good relationship-based loan officer. And yeah, I mean, I've heard it enough. It's almost like cliche at this point, but I think that that's never been more true and more apparent than today as we talk about these things. That like, no, the loan officers that focus like what we're talking about on that relationship and use all the tools to make that stronger, they're gonna fucking crush it for years to come. And there's not gonna be room for, you know, for the LO that's trying to use all these tools the same way that Rocket is using them, the same way that Veterans United is using them, same way that services are using them, which is a way to simulate a relationship where it doesn't exist and hope to extract revenue out of that.
Yeah, and that's so good. I hope people listen to that, because you are a tech guy, and this is your world, and you just literally told loan officers that it is still all about relationships. So it's really important that people pay attention that a tech guy just said, with all the loan officers, like I always tell you, Michael, like you have one of the greatest labs, you know, in our industry, in the whole nation, because you're touching so many top producers and loan officers with every model, IMBs, brokers, and you get the behind the curtain look at all of their businesses. And so for you to say that makes me feel really good that what I believe is true. I would add to that I've been really paying attention to my clients over the last couple years, and I always ask myself this question: if this person had their phone, you know, send them a message and say, hey, Michael, I noticed that your mortgage when you were paying your bills was a 6%, and I just did a research for you with 25 lenders, and it looks like this lender has a 5-star review, and you can drop your payment $300. I calculated the fees for it. Would you like me to submit an application on your behalf and see if we can? Because I do think it's going there, right? And I think you do too. But I promise you this: there are a ton of the clients that I work with that would not do that. They want to sit down with someone they trust, a human being that actually has their best interest in mind, to advise them and guide them and help them. And the other thing is, bro, that's true for me. Like, I like AI, but you know what I like more? I like excellence. I like expertise.
Amen.
And so when I go to buy a big ticket item, I know, because I've been around a while and I've made a lot of money, I've spent money, I've bought big ticket items, that highest value is never lowest cost. And so I appreciate great advice and great service, and I'm always willing to pay a little more for that, because in the long run, I believe that's going to be better for me, because my time is very valuable, right? So, so again, going back to non-QM and the trends in production this last year, I mean, that's one of the reasons why a lot of the smartest loan officers have pivoted away from the ultra high net worth jumbo loans in San Francisco, and let the private bankers at Wells Fargo do that. We're going to go after non-QM. We're going to go after DSCR. We're going to go after, FHA and down payment assistance programs where people actually need us. Because the truth is, if you're an AI tech at Google with a W-2 for $800,000 a year and you've got $1 million in the bank, like
800 FICO.
You can close your loan in 10 days without an appraisal. And you really don't need to pay the full margin to anybody, because you can click a couple buttons and get your loan done like that. And that will probably get bigger and bigger as time goes on. But yeah, I just think there's always going to be a place for people that give high value, that advise their clients, and try to really build relationships with them. And I don't think that's going to go away for a while. And there's going to be people that disagree with me, but hey, man, if I'm wrong, make as much money as you can right now.
No shit, huh? Make hay while the sun shines. That's awesome. That's awesome. All right, dude, this was great, man. We definitely, we covered a lot of ground, and I mean, I love hanging. To me, this is like just another hangout session between you and I, which I freaking love and appreciate. And I've just loved having you as a client and as a friend. Appreciate you spending time and sharing your wisdom with everybody who's listening. Is there anything that you want to wrap up with? Any call to action? I mean, this is your opportunity to plug whatever you want to.
Sure.
Yeah.
Yeah, well, I mean, on the topic of tech, I'm a by referral guy, so most of my business is referrals from business people and partners and past clients. But I do believe in online marketing, and one of the things that I have done to be a better partner to my partners is to generate buyers to reciprocate with my partners. And there is not a better tool out there than Empower LO. Roy Burr is our good friend, and he introduced you to me, and this has been a really amazing journey developing Empower and learning about Go High Level. And you and your team have done some incredible things for us. You guys are the epitome of relationship. Even though you're a tech company, like, you guys serve all your LOs at a very high level. So if someone's trying to figure out, how to add more value to their partners, and they want to add some supplemental business to their branch, to their LOs, they should really check your platform out. I totally believe in it, and I use it every day. The last thing I would just say is, if you're a loan officer who, you're doing 5 or 6 loans a month, and you've made more money, your income is down, you're depressed, you're struggling, you don't know what it's going to take to reboot your business, you should really consider coming to our coaching event in May in Tucson. It's the summit, and I'm sure Michael can get you my email address if you want to know about it. But we have people come twice a year, and they usually, their businesses change when they get around a bunch of people who are figuring out how to win in this market. And like I said, one of the things that we're doing is using Michael with Empower. So that's it. If you want to find me, you can find me on socials at It's Chris Lamm. And I'm always answering people's questions. I love loan officers. I think we're some of the most unique people in the world, and I'm really grateful to be a part of the community, bro. Thank you.
Hell yeah. Thank you, Chris. Thanks for the shout out. Wasn't expecting that, but I appreciate it. And yeah, we'll drop if it's cool with you, we'll drop your email in the show notes. And then, yeah, always, anytime you want to connect with any of the guests on the podcast, anybody as freaking awesome as Chris Lamm, feel free to reach out to me. And I'm happy to get you guys linked up. But with that, guys, this was another awesome episode of the MLO Project. Be sure to check us out on YouTube. We just got everything set up on YouTube. We're posting shorts there. We're posting full episodes there. So be sure to check us out there. Otherwise, if you're listening on your favorite platform, then subscribe to us there. Like us, review us, anything you can to shout us out. Let us know how we're doing. But until next episode, guys, thank you so much for listening, and we'll see you at the top.